There is an industry that makes more money when you are afraid. Not when something bad happens to you. Not when you file a claim. Not when disaster strikes. Simply when you are afraid that it might. And that industry has been studying your fear, cataloging it, pricing it, and selling it back to you for over 300 years. This is the insurance industry, and it is one of the most sophisticated fear machines ever built. Let us begin with a number. The global insurance industry generates over $7 trillion in premium revenue every single year. 7 trillion. Not in total assets, not in historical earnings. Every single year. That is larger than the GDP of every country on Earth except the United States and China. And almost all of it flows from one simple human emotion, the fear of loss. Think about the last time you bought insurance. Maybe it was for your car, your home, your health, your life, your phone, your holiday. At the moment of purchase, your mind was not calm. It was running through scenarios. What if there is an accident? What if there is a fire? What if I get sick? What if I die and leave my family with nothing? You were not buying a product, you were buying relief from a feeling. And the insurance company knew exactly what that feeling was worth. This is the foundation of the entire industry. Actuaries, the mathematicians of insurance, spend their careers calculating the precise probability of every bad thing that could happen to you. The probability that your house burns down. The probability that you develop a serious illness before age 50. The probability that your car is stolen in your specific neighborhood on a specific type of road. They know these numbers with extraordinary precision, and then they charge you more than those numbers justify. The gap between what they charge you and what they statistically expect to pay out, that gap is called the underwriting profit, and that gap is where the money lives. Here is something the insurance industry does not advertise. For every dollar collected in premiums globally, insurers pay out significantly less than $1 in claims. The industry average loss ratio, the percentage of premiums actually paid back in claims, sits between 60 and 70%. That means for every $100 you pay, the insurer expects to return $60 to $70 in claims. The remaining $30 to $40 covers their costs, their salaries, their buildings, their marketing, and their profit. But the underwriting profit is only the beginning. Because while your premium sits in their account before any claim is ever paid, the insurance company invests it. This is called the float. Warren Buffett has called the insurance float one of the greatest financial mechanisms ever invented. Your money, the money you paid for protection, is actively working for the insurer in stock markets, bond markets, and real estate portfolios around the world. When you pay your annual car insurance premium in January, that money does not sit in a vault waiting for your accident. It is deployed immediately into financial instruments generating returns. And if you never claim, they keep the premium and keep the investment returns. They win on both sides of the bet. Now let us talk about the fear marketing itself. Because the insurance industry does not just benefit from fear, it actively cultivates it. Turn on the television in any country and count the insurance advertisements in a single hour. Each one follows a formula so precise it feels almost algorithmic. A happy family, a sudden disaster, a moment of vulnerability, then the reassuring voice, then the brand. The message is never about the product, it is always about the feeling. Your family could lose everything, your children could be left with nothing, everything you worked for could disappear overnight, unless you call this number, unless you pay this premium, unless you stay protected. The advertisement does not sell security, it sells the temporary relief of fear, and then manufactures new fear the moment that relief fades. The renewal letter is perhaps the most sophisticated fear tool in the industry. Every year, without fail, a letter arrives. Your premium has increased, your coverage terms have changed. New risks in your area have been identified. Please review your policy carefully. Most people do not review their policy carefully. They renew automatically, because the alternative, being uninsured, even for a day, feels genuinely dangerous. This is not an accident. The friction of switching insurers, the anxiety of a coverage gap, the complexity of comparing policies, all of it is engineered. The system is designed to make staying feel safe and leaving feel risky. Let us talk about claims, because this is where the relationship between insurer and customer becomes most honest. When you pay premiums, the insurer is warm, welcoming, and efficient. When you file a claim, the dynamic shifts entirely. Insurance companies employ entire departments whose primary function is claims assessment. But embedded within that function is a secondary purpose: minimizing payout. Adjusters are trained to find policy exclusions, to identify pre-existing conditions, to question the circumstances of a loss, to offer settlements below the true value of a claim. This is not corruption, it is architecture. The policy document you signed, the one almost nobody reads in full, contains language specifically designed to create ambiguity at the moment of maximum vulnerability. When you need help most, the document you trusted is working against you. There is a concept in the insurance industry called adverse selection. It describes what happens when people who know they are high risk seek out insurance coverage more aggressively than people who believe they are low risk. The industry has built its entire underwriting system to combat this. They collect data about you before they price your policy. Your age, your gender, your location, your credit score, your driving history, your medical history, your occupation, your postcode, your marital status. Every data point narrows the probability calculation. Every data point allows them to charge you more precisely, more profitably, for your specific fear profile. You are not a customer to an insurance company. You are a risk, and they are pricing that risk to make money from it. Now consider the health insurance industry specifically. In countries where healthcare is privately insured, particularly the United States, the fear economy reaches its most extreme expression. The United States spends over $4 trillion annually on healthcare. Health insurance companies sit between patients and providers, collecting premiums from individuals and employers, and negotiating payment rates with hospitals and doctors. They profit from the spread. In 2023 alone, the top 5 American health insurers generated combined profits exceeding $50 billion. $50 billion extracted from a system built around human illness, vulnerability, and the terror of medical debt. People in the United States delay medical treatment because they fear the cost. They ration medication because they cannot afford the copay. They file for bankruptcy after receiving care that, in most developed nations, would cost almost nothing. And through all of it, the insurance companies continue collecting premiums, continue investing the float, continue posting record profits. The life insurance industry operates on perhaps the most emotionally sophisticated fear in the entire sector: the fear of death. Specifically, the fear of what happens to the people you love after you die. Life insurance marketers do not sell you a policy. They sell you a vision of your own absence, your spouse, struggling alone, your children, growing up without financial security, your parents, grieving and financially burdened, and then, the relief, the policy, the protection, the peace of mind. What they do not tell you is that the vast majority of term life insurance policies, the most commonly sold product, never pay out a single claim, because most people outlive their term. The insurer collected every premium, invested every dollar, and paid out nothing. This is not a flaw in the system. This is the system working exactly as designed. The property and casualty insurance market is where the fear manufacturing becomes most visible in daily life. After every major hurricane, every wildfire, every flood, premiums rise, coverage shrinks, entire regions become uninsurable. The insurer points to climate risk, to reinsurance costs, to regulatory requirements, and homeowners, many of whom have paid premiums for decades without a single claim, find themselves facing exponentially higher costs for diminishing protection. In Florida, several major insurance companies have withdrawn from the market entirely, leaving hundreds of thousands of homeowners scrambling for coverage in a market where fear has become so acute that the product itself has nearly collapsed. And yet, the parent companies of those same insurers continue reporting profits in other markets, in other states, investing the float from premiums collected elsewhere. The fear stays local, the profit travels globally. There is a darker dimension to this industry that almost nobody discusses. Insurance companies are among the largest institutional investors on Earth. They collectively manage over $30 trillion in assets globally. Your premium, paid monthly, paid annually, paid automatically, flows into this investment pool, where it funds stock markets, real estate developments, infrastructure projects, private equity funds. The insurance industry is not just in the business of managing risk, it is in the business of deploying capital at a scale that shapes entire economies. When insurance companies decide which industries to invest in and which to divest from, they move markets. When they decide a neighborhood is too high risk to insure, property values collapse. When they decide a medical procedure is not covered, it effectively does not exist for millions of people. The power of the insurance industry extends far beyond the policy document. It shapes what gets built, what gets treated, what gets protected, and what gets left behind. So why do we accept this system? Because the alternative, facing catastrophic risk with no financial buffer, is genuinely terrifying. And the insurance industry knows this better than anyone. They did not create human fear, but they have spent 3 centuries learning to build a business on top of it, learning to price it, to package it, to sell relief from it, and then manufacture new versions of it. The genius of the insurance model is that it is both genuinely useful and profoundly exploitative. Simultaneously, you need it, they know you need it, and they have constructed an entire economic architecture around the fact that you will keep paying. Whether something bad happens or not, the most profitable insurance customer is not the one who never claims. It is the one who never questions, the one who auto-renews without comparing, who accepts the premium increase without calling, who never reads the exclusions, who trusts that the system built to profit from their fear is also the system designed to protect them. That customer is worth more than any single claim ever paid, and there are hundreds of millions of them, paying, every month, silently, afraid. The next time a renewal letter arrives, read it. The next time a premium increases without explanation, call and ask why. The next time an advertisement makes you feel afraid of losing everything, notice what it is really selling. Because the insurance industry is not in the business of protecting you, it is in the business of being paid to make you feel protected. And as long as the fear keeps working, the premiums keep coming, every month, every year.